Welcome everyone to the Kendall Report. Before getting into tonight's commentary, I just want to mention that I am working on putting a channel together on TradingView. You can find me Kendall Report. Go ahead and start following me there. I am planning on putting a fair amount of information out there, including I now have the PPMs out there. I have not published them yet. There's a couple things I need to do, but there's going to be access to some of my indicators out there. So this will be an exciting event, at least for me personally. So let's go ahead and get started on tonight's video. As we look back on yesterday, markets continued to move higher. We saw the S&P up 0.2, NASDAQ up 0.9, Russell up 1.2%. The S&P and the NASDAQ were able to render an all-time new high. So we're going to continue to see this market move higher. As I mentioned in last night's video, I do expect to see the markets actually continue higher throughout the week. I think we've got the Fed, we've got the GDP update. There's a lot of things that are coming out, not to mention this huge number of earnings coming out. And in fact, just talking about earnings, Tesla came in with pretty good sales, but no one really cares. Last time I looked, the stock was down almost 2%. We have 192 reports coming out today, but the key ones, Microsoft, Google, Visa, most of these are coming out after the close. So the effects will roll over to the aftermarket tomorrow night as well as into Wednesday's activity. As far as it goes tomorrow, there are plenty of things that are coming out tomorrow that will stimulate the market. As we go through earnings, I will continue to expect to see these numbers come out better than expected. That's not a real big surprise. About 65% of the time they come out better than expected. So far in the early releases, we're looking at closer to 80%. So everything is being underestimated, and I think this is at fault of the analysts themselves. They're lowballing these things, so there is a bit of a conspiracy that goes on every time we have earnings coming out, just because there seems to be a lot of underestimating that helps to catch a bid in the stock. As we come into Tuesday, I don't have any big expectations for volatility. I believe markets will be somewhat hesitant ahead of the Fed meeting on Wednesday and a lot of the reports that are coming out after the close. So look for a lower volatility day on balance. So let's go ahead and take a look at the charts, see how they're set up for Tuesday. As I review the WaveTech database, we continue to see a substantial amount of traction come into the database. We have 1,569 new buy signals, 161 sell signals. So this sets a very bullish tone again. The bullish percent has moved up to 59.23%. And you may ask, this is kind of funny that this is happening right as we're making all-time new highs. But what this is suggesting is that the next 24 to 34 sessions are likely to have a bias to the upside as this traction is coming on. The typical holding period for these symbols are between 34 and 40 sessions. The current average duration is at 8.42. We're a long ways away from hitting the extremes, and typically we go between 34 and 40 days in this cycle. So expect to see the markets continue to rotate strong. I talk to you about these numbers all the time. If the database moves above 62%, then the next levels will be 68, 72, and then we could see as much as 80+% bullish in this run. I talked about this several weeks ago that I expected when we did get traction in the database that we'd see a lot of symbols come into play. Well, this is the big reveal for tonight. We are looking at TradingView, and you're looking at the PPMs 1, 2, and 3. And I'll start with the analysis here. I do not have the market grid in yet, but I just want you to see what's going on. So make sure that you go and find me on TradingView. As we look at the S&P, we're slightly higher on the night. We're trading right around yesterday's highs right now. But looking at the PPMs, we'll see that PPM 1 is at a plus 1.3. PPM 2 at 0.26, which is in trend mode, and PPM 3 at a 0.18. But we are seeing them stall a little bit here, but this is typical in this phase of the market. So as we look at some of the values, the 10-period moving average right now is 41.56. So that is going to be the major support under the market. So let's go over to TradeStation. S1 is 41.68. The low overnight's been 41.78. The high 41.92. And R1 is 41.90. We've already seen a print above R1. We're short of being an S1. So what I'm looking at for today is an S1 R2. I do believe we'll probably challenge the 4,200 level today. If we were to take out 41.68, then we'd end up with a R1 S2 from a pivot viewpoint. But it looks like everything is stacked to continue to move higher in this pattern, even though we've seen the market grid actually stall from the volatility viewpoint. It is actually widened enough that we're in a safe zone to continue to print slightly higher in this pattern. As we look at the SPX, SPX has similar numbers with a PPM at 0.14, PPM 2 at 0.32, and PPM 3 at 0.23. So we have better trend levels on the cash market, and the PPMs have a better formation overall from the standpoint of the momentum. As we look at the market grid for today, what we're likely to see is that S1 R2, that's 41.77 on the downside and 42.08 on the upside. We should continue to stay within that range. Yesterday we traded right above the R1 number, 41.92. The high was 41.94. In fact, I didn't mention, but the futures just hovered right around the R1 number. I thought we would see an S1 R2 number. We didn't see that. So I do expect to see, since we've already taken the futures out of R1, that we should move up towards R2, 4206.83 for tomorrow's high. Next market to look at is the NASDAQ. NASDAQ continues to move higher overnight. We're at 14,028. As I mentioned in last night's video, I thought that we would get toward the R2 number, 14,046. We hit a high of 14,039, so we went right to that number. As we look at today's range, we've already been at 14,050. R1's 14,063. S1 13,959. So we haven't come close to S1. We may see some early morning profit taking, but I do expect, like with the S&P futures, that we will see a S1 R2 number on the upside. So I do believe we'll get above this R1 number and move toward the R2. So I mentioned in last night's video somewhere between 1,120, 130 to around 1,150 or so will be the likely move up for the week. If we get above that level, I'll discuss that on Wednesday's video and talk about it in Wednesday's live stream when we. The final market that I'll cover is gold. As I mentioned in yesterday's video, we continue to remain above the 10-period moving average. PPM1 is at a 0.19, PPM2 0.12, and PPM3 0.07. So there's not a lot of upward momentum on a short-term basis, but as long as we remain above this 10-period moving average, we're likely to start to move toward that 1800 level. Now we're just completely flat for the last 3 sessions on a closing basis. It looks like we're about to take out yesterday's high, which was 1783. The high so far today, 1783.90. So if we can get above this high and remain up there, then we will see the market move toward the upper end of 1890 to 1896, which would be an R2, R3. Just a quick look at the weekly, because this is the perspective that is going to be important. The 21-week moving average is at 1800 and R2 is 1800. So I still expect to see us do an R2 number for this week. We have already satisfied the S1, 1767.20, the low 1768.20. So we're $1 off of that low. We should continue toward this. We should continue toward this 1800 level as we go through the week. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night. Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/WaveTech. Sign up for our software. You get Market Grid, on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you that already signed up, thank you so much.